Welcome to More Than Bootstraps and M&T Bank. We are going to be talking about some banking basics, and we're really happy to have all of you here with us.
We're going to learn about the different types of bank accounts, information on opening up an account, strategies about budgeting and saving, and little tips on how to build your credit.
The types of accounts that you guys will find at banks or credit unions are your typical checking accounts. These are the type of accounts that allow you to deposit, withdraw money, do daily transactions with a debit card at a restaurant, at a store, at the mall, anywhere you can spend money at.
Along with your checking, it's always good to have that savings account, because your savings is the account that you're going to have to grow, to budget your money.
Budgeting is the process of creating a plan to spend your money, basically being smart with your money. So once you receive, let's say, your paycheck or an allowance, or you have a certain amount of money for a week or two, it's going to help you organize yourself and plan ahead.
Different strategies for savings. So one of the strategies would be just making a habit out of savings. One of the things you could have set up is having an automatic savings transfer coming from your checking to your savings. So say every time you get paid, you could have a certain amount of money being moved from your checking account to your savings account, whether it be weekly, monthly, and then that way you have that goal being set up and growing without you even knowing. So if you have a goal, keep that goal in mind.
Setting financial goals is very important at an early stage as well. Start talking about the short-term goals. So these are going to be goals that you're going to want to accomplish in about maybe a few weeks, a couple months, or maybe in half a year. Say the school year is starting again, you need to save up for clothes, or there's something else that you want to buy very soon that's not that expensive. So you put money aside, and once a month or two have passed, and you did your budgeting, you saved and you limited your spending, you'll see that money on the side that you can use and reach your short-term goals. Reaching your short-term goals is very important because it'll give you confidence, like, oh, I really did it myself. I saved for a couple months and I got something that I really wanted. More of the medium-term goals would be something that can be accomplished in about 2 or 5 years. So I'm assuming some of you are probably already driving or will start driving soon. So saving after maybe a year or two, you will notice that you'll have enough maybe to buy your first car. And last but not least, the most important ones that is going to be for more than 5 years or 10 would be your long-term goals. This is going to be when maybe you want to buy a house or an apartment. You want to make sure that your long-term goal money, you are not touching it unless it's an emergency. Because the more you take out from those savings, the harder it's going to make it for you to reach those long-term goals.
So if I go into my Money Smart tool, it kind of opens up my eyes sometimes, because it shows me what I'm spending my money on and what I shouldn't be spending my money on. So it's a pretty cool tool that helps you track your personal spending, and it helps you get those finances in place.
So it comes with the account that you open,
yeah.
So might as well use it. Yeah.
It's good to have those tools available to you, and again, at no cost. You don't have to sign up for anything. You don't have to pay for anything extra. Everything is there for you. So what is a credit score? A credit score is a 3-digit rating that tells a lender how likely you are to repay back debt. The poor and fair would be kind of like your short-term goals. You're getting started. You're trying to build your credit. That good section in the middle would be you getting your credit card, you trying to start things off. The very good to exceptional is down the road, that long-term goal, trying to get a mortgage, trying to get an apartment.
Even a car as
well.
Yeah,
even a car as well.
Don't think that because you're getting stuff, your credit is good. That doesn't necessarily mean that. What it will do is it will have you paying a lot more interest. So keep that in mind always. Otherwise, you'll be paying a lot of money when you take loans.
So what helps you build your credit? Getting a credit card, checking your credit report, and being mindful of your credit usage. And then lastly, paying your bills on time and never missing a payment.
Being this young and starting your credit, you have to start gradually. What the secure card is a credit card that you will fund in the beginning with a secure deposit. So you start with something as low as $250 so that you can tell the bank, hey, I'm going to give you a little bit of money, you're going to freeze it, and I'm going to use it. So then you use the money and you repay it back. You're showing the bank that, hey, you're someone they can trust. After 6 months, a year maybe, they're going to look at you and say, hey, they are paying their credit cards right on time. You know what? Let's give them their initial deposit back, $250, take it back, and we're going to give you a bank credit card. Graduating from a secured to an unsecured credit card. And slowly but surely, your score will go up. And it's good that you keep track of it because it also helps you get encouraged to keep going, And I tell all of my clients, don't spend money on your credit card that you do not have. Because not only will it slow down your progress on your credit score, but also can get you in debt. And that's a really bad habit. Just live by this. Don't spend more than you have, and you'll see your credit score go very high.